good morning. We will pay attention to companies and we will look at the general ledger accounts. When do we do companies? Okay, so if we look at the information that's provided, they give me the share capital at the beginning of the year. So that is my opening balance. So I will start on January the 1st with a balance. So that is the amount that of all the shares, the total value that we sold during previous years. And that will give me 680,000 rand. Okay, then retained income, 80,000. So it means in previous years they did not pay out all the money that they received as profits to the shareholders. They kept some of the profits back in the business so that they can use this money to expand in future, or if there's economic crisis, that they don't have to borrow money. Then they give me for SARS at the beginning of the year an opening balance of 4,800. So if this balance is on the credit side, it means at the end of the previous year we didn't pay enough provisional tax, so we still owe money to SARS, 4,800 rand. And we will have to pay that during the current financial year. Then shareholders at the beginning of the year, the balance is 24,000. So at the end of the previous year, we declared a final dividend, and we only pay it at the beginning of the current year because there was not enough time to pay it. So this is also an amount that we have to pay out at the beginning of this year. Okay, then they're giving us a loan with a balance of 96,000. So January the 1st, the balance brought down is 96,000. So that is the amount that we owed on the loan at the end of the previous year. Okay, if we look at all the additional information that they give us, they say that we issued 200,000 shares at 150 cents each and 200 at 190. That is in previous years. Our current financial year ends at the end of 2023. So this is new shares that was issued during the current year. Those two were issued during previous years. So that means this balance consists of 200,000 shares that we issued at 150 cents and 200,000 shares that we issued at 190 cents. This is very important because when we have to work out the average price when there's a repurchase of shares, we need this information. So make sure that you know exactly the number of shares and the value of the shares. Okay, the outstanding amount at the beginning of the year was paid to shareholders on the 10th of January. So on January the 10th, we pay the money for the final dividends that was declared at the end of the previous year, 24,000. And then we don't owe any more money to the shareholders for the previous year. An interim dividend was declared and paid on the 1st of July. So remember, an interim dividend is always paid immediately when you declare it, because that's the whole purpose of an interim dividend. The shareholders don't want dividends only once a year. they want dividends twice a year. So the majority of companies will declare an interim dividend in the middle of the year and then pay that money out to the shareholders. The final dividend at the end of the year, in the majority of cases, there's not enough time to pay it, so that will be your closing balance to show the amount that you still owe. Okay, interim dividend of 4 cents. Now look at your date. This is on the 1st of July. The new shares are issued on the 15th of July. So those shares are not issued by the time that we declare the interim dividend. Only shareholders that have dividends in their possession can get dividends on the shares that they have. So if it wasn't issued yet, they are not entitled to a dividend. So if I want to calculate this dividend, I would say that the number of shares that we have to take into account, and we already said there it's 400,000. So it means that this dividend will be paid to 400,000 shareholders times 4 cents. And that gives me 16,000 Rand. So I will show in the middle of the year, on July the 1st, that we declare dividends. So ordinary share dividends will be debited with the amount that we have to pay to them, and that's 16,000. And we will show that we have an expense for dividends that will be taken out of the profits on July the 1st. Shareholders for dividends. $16,000. Okay, so I create an expense. I indicate that I owe the money to the shareholders. Because it's an interim dividend, I pay it immediately. So it means I will show on the 1st of July, interim dividend was declared on the 1st of July. We pay this money so that we don't owe money to the shareholders, and I will pay them the 16,000 Rand. Okay, then 48,000 was paid to SARS during the year. Okay, we're first going to do that one and then the rest of the part. Now, SARS income tax, we owed them 4,800 at the end of the year. So we have to pay that in the current year. Then we also have to pay provisional tax in the middle of the year. We do a little income statement, see what is the profit, just the difference between income and expenses, and we send them 28% of that profit. At the end of the year, before we do the adjustments and the final financial statements, we will determine again what is more or less the profit, and we will send them 28%. So SARS, we will normally pay them 3 times a year. If there was an outstanding amount at the end of the previous year, we have to pay it at the beginning of this year. Then we have to pay provisional tax in the middle of the year, and then we pay provisional tax at the end of the year. What's very important is that you must remember the provisional tax payment is to pay our debt, our liability at SARS. You are not allowed to use the income tax account before the final income tax was calculated during the year. Okay, now in this exercise, they don't give us 3 different amounts to say we paid the outstanding amount and first provisional tax payment, second. They just say the total amount that we paid was 48,000. So I will show that for the total year, up to the 31st of December, the total amount that we paid was 48,000. Then they say income tax is calculated at 28% on the profit for the year. They don't give me the profit, so it means I can't calculate the 28% there. Now I have to use my knowledge of income tax and say we first paid the outstanding amount, we paid the provisional tax, and then at the end of the year, when we finalize our financial records, we will pay income tax. So I will have an income tax amount here, and I will go and debit my income tax account on December the 31st, SARS income tax, to indicate this is our expense, and this is the only time when you're allowed to write in this account is when you know what is your final profit. Okay, then they tell us that SARS at the end of the year has a debit balance of 1760. Now remember, that balance that they give you is the balance brought down. So before I can bring down the balance on the debit side, I first have to carry it over on the credit side. So the balance brought down is a debit balance, and then there I would show that the balance was first carried down 1760. And now, although they didn't give me the profit, they gave me the opening and closing balance and the amount that we paid during the year. So it means that I can, by balancing, work out what is this income tax amount. So the total on the debit side is 48,000, and the total on the credit side is 48,000 minus 4,800 minus 1760, and that gives me a balance of 41,440. So now I know what is the income tax for the year, and I can show that the income tax account is debited because this is the expense, and the SARS income tax account is credited. Now remember that except for bank that sometimes have a debit and credit balance, this is the only balance sheet account that you have, that sometimes it's an asset and sometimes a liability. So if the balance is on the credit side, then it is a liability and I have to pay it. If this balance is on the debit side, it is an asset, so it indicates that we pay too much provisional tax and SARS owes us money that they have to pay back to us. Okay, annual repayment of 48,000 was paid on the loan. Okay, so here in your loan account, you will indicate that we paid on this loan a total amount of 48,000. Okay, then very important, they say the loan interest is capitalized on the loan, so it means that I will have interest here on the credit side. They don't give me this amount, so I must calculate this amount by balancing. If I look at my loan account, the closing balance at the end of the year is 70,000. So that is the amount that we still owe at the end of the year. Now I'm going to balance this account again so that I can determine what is the interest. Okay, so if I add up the debit side, I get 118,000. So the total on the credit side must also be 118,000 minus the 96, and that indicates that the interest is 22,000. So it means of this 48,000 that we paid, the payment was 48. 22,000 of that was interest. So the amount was actually reduced by 26,000. And if you look there, 96 minus 26 gives me 70,000. So it means that the interest is very high when you have a loan, and if you're not careful, you can pay double the amount that the thing, whatever you bought with the loan, actually costs, because you have to pay so much interest. Okay, the company decided to repurchase 100,000 shares on the 31st of December. Now, what's very important is that you must determine whether this original shares were issued before or after the repurchase. They were issued before the time, so we will show in our capital account that our capital increased with 100,000 shares at R2.40. So on July the 15th, we received money in the bank, 100,000 times 240 cents, and that gave me 240,000 rand. Okay, now we go and we repurchase shares. Now, when there's a repurchase of shares, it's very important to determine whether the price that they're going to pay is more than the average price, because it's more than the average price, some of the money will go to the capital account and some of the money will decrease your retained income. So I'm going to calculate this now, and I'm going to say that we had 200,000 shares at R1.50, and that gave me 300,000 rand. Okay, then we issued 200,000 shares at R1.90, 190 cents, and that gave me 380,000. Okay, and then we issued 100,000 shares at 240 cents, so that gave me 240,000. Okay, so if I add it up, before I repurchase shares, the total number of shares is 500,000, and if I add up what is the capital amount, it gives me 920,000. So before I can do any entry, I first have to determine the weighted average amount. So it means I will take the 920,000 rand, I will divide it by the number of shares, 500,000, and that would give me an average price of R1.84. Okay, now we are prepared to pay R1.90. So why will the business pay R1.90 if the shares are only R1.84? You must remember that the ordinary share capital and the retained income, those two together is your equity. So equity consists of the capital was obtained by the selling of shares, and retained income because all the profit was not paid out to the shareholders. So they are actually entitled to get some of this money because this was money that was not paid out of profits to them, and as an owner of the business, they entitled to that profit. Okay, so we're going to say that we're going to do 100,000 shares. We are prepared to pay 190 cents for it, so that gives me 190,000 rand. Then I go to the average price and I say 100,000 shares times R1.84, and that gives me 184,000 rand. The difference between the 190 and the 184 is 6 cents. So on 100,000, you will pay 6 cents out of the profits, and that would give me 6,000 rand. So these two must add up to the total amount that you're going to pay. So I'm going to say that my capital decreases with 184 and my retained decreases by 6,000. So this is on the 31st of December. So the amount that we will reduce our capital with is the 184,000. And then we will take the rest of the amount that's above the average price, and we will obtain that out of our retained income. Okay, so that's the repurchase of shares. Then they say a final dividend of 8 cents per share was declared on the 31st of December. Now, if they don't tell you, it means if you repurchase it, they're not entitled to the shares anymore because they don't have the shares. But in this sentence, they say the final dividend of 8 cents per share must be paid to these shareholders before the repurchase. So they also entitled to the 8 cents. So it means at this stage, we have 500,000 shares before we did the repurchase, and our dividends will then be calculated on the 500,000. So I will show 500,000 shares times, and the dividend is 8 cents. Okay, so on December the 31st, we show that we owe money to the shareholders. So this liability increases on the credit side, and the amount of this is then 40,000 rand. We don't pay it immediately. So if you look at the sentence, you see there, for the interim dividend, they say declare and paid. For the final dividend, they only say declare. So we are prepared to pay out the money, but we haven't paid it yet. It will only be paid at the beginning of the following year. Okay, then we go to the ordinary share dividends account, and I say on December the 31st, the expense for dividends increased with 40,000 shares. Okay, so our rand expense increased. Okay, now if we want to balance these accounts, it means that I will start with the ordinary share capital, and I will add up the credit side because the credit side is more than the debit side. Equity increases on the credit side. That gives me 920,000 rand. The amount on the debit side is 184. So this total must also be 920. Then I subtract the 184, and that gives me 736. And that will then be the balance that I will carry down to the next financial year. So on January the 1st, we will start with a balance of 736,000. Okay, if we look at the shareholders for dividends, we will also balance this account. Now remember, this is a liability. Liabilities on the credit side is always more than the debit side. So I can add this up, and that gives me 80,000. Then this total must also be 80,000. And 80 minus the 24 and the 16 will give me 40,000 rand. So on December the 31st, the balance of the money that I owe and will carry down to the next financial year will be 40,000 rand. Now, what's very important when you do the shareholders for dividends account, sometimes they don't tell you, they just say they declared a final dividend. They don't tell you how much it is. But if they give you this closing balance as 40,000, you know that that is the final dividend, because the amount that you owed at the beginning of the year was paid. The interim dividend must be paid immediately. So if there's a balance in the shareholders for dividends, it will always be the final dividend. Okay, now the appropriation account. First of all, we will do a trading account. We will take sales, less cost of sales, calculate gross profit. Then we do the profit and loss account, adding all the income, subtracting expenses, and calculating the net profit. That net profit goes to the appropriation account. So on December the 31st, I will show that the amount of profit that we made in the profit and loss is transferred to the appropriation account. In this exercise, they didn't give me the profit. The only information that they gave me is that the tax is 28%. Okay, now if we go to our SARS account, you see there that the income tax was 440,000. Okay, I'm going to do this calculation at the top of the page that you just have everything together. And I say profit before tax is 100%. Tax is 28%. Profit after tax is 72%. Now, of all three of those figures, the only one that we know is that the income tax is 41,440. So I will show there the income tax is 41,440. Now, what is the amount that I want in my appropriation account? The profit before tax. So it means I want to know that figure. So I will take the 41,440 times the one that I want, 100, divide by the 28 that we know. And that will give me then 148,000. So it means that I can show here that my profit is 148. So it's very important that you realize they don't have to give you all the information. They can give you certain information, and because you can calculate certain figures out of that, you have to use that figure, as we did now with the tax, to go and calculate what was the profit. Now, in this case, they also didn't give me the income tax. I had to go and calculate this 41,440 by balancing the SARS income tax account. And that figure was very important to calculate this 148,000. Okay, now the first thing that we have to do is we have a profit, but that's not the only money that we are allowed to divide in the current year. We also had money from the previous year. So I will take to my appropriation account how much money was left over in the previous year, 74,000, because I've used 6,000 in the current year to buy back the shares at a higher price than the cost that we originally issued it at. So it means that these totals must be 80,000, and then this retained income account closes off. That 74 that's left over is transferred to the appropriation account, and if they ask you how much money is available to share between the partners, you will say the 148 plus the 74,000. Now, what do we use this money for? First of all, we have to pay income tax. So it means this income tax account must be closed off at the end of the year and transferred to the appropriation account to indicate how much money was paid for income tax on the profit that we made. So I will show here that we paid out for income tax. The total amount calculated for the year was 41,440. Then we go to the ordinary share dividends account, and I say the total dividends that we declared in this year was 56,000. So it means this 56,000 is divided between the partners, shareholders, in the ratio of how many shares they have. So for every share, they get a certain number. So this will also close off at the end of the year, and I will take this to the appropriation account, the 56,000. And then my total is 56. So that 56 I take to the appropriation account to show that is the ordinary share dividends that we declared during the current year and that we will take out of our profits. And if we close our appropriation account, we can determine what is the outstanding amount, balancing figure, and that is the amount that is retained, that will go to my retained income account. Now remember, you are not allowed to pay out dividends if you haven't got enough money. So it means this credit side will always be bigger. This gives me a total of 222,000. And if I take the 222 and I subtract the income tax and the dividends, it means that we've got left over 124,560. So the amount that they kept as a retained income at the end of the year increased from 74,000 to 124. So they retained more profit this year than in the previous years. Okay, so this amount will now go to retained income, and I will show that retained income is credited at the end of the year with the amount from the appropriation account that was not paid out to the shareholders. So if I look at this figure, ordinary shares and retained is my equity accounts. So this will go to the balance sheet as equity. The retained income balance will go to the balance sheet as equity. The shareholders for dividends will go to the balance sheet under current liabilities. Ordinary share dividends is expense that was closed off to the appropriation account. This amount here, because it's a debit, it will go to the balance sheet as current assets. Income tax was closed off to the appropriation account, so it means that I closed off all my accounts now and there's nothing left over. I hope you understand this work much better now and that you realize that you have to read very carefully, and if you think that you don't have information to do something, carry on with the rest, do everything that you have, and then you will see that you will be able to calculate some of the figures by balancing the accounts. Good luck with the exams.